Hi there. It looks like people are still joining here and there. At least there were about 30 people pre-registered, and there are not quite that many people here now, but I do believe I should get going to honor people's timeliness. My name is Joe Boucher. I am a lawyer in Madison, Wisconsin, and a teacher at the University of Wisconsin-Madison. I've been blessed to have been working with Forward Fest since it started. The founders of it, Matt Yonkel, Forrest, and Nate Lustig and I chatted, and we've been more than happy to and pleased to be able to be a sponsor since day one. So I'm really happy to be involved here. And please note all the sponsors, because this is a substantial contribution they make, and we want to thank them for their work here. And so again, that's one point. Another is that this is about an hour session. If any of you want to contact me afterwards, you'll be able to do so. You'll see my name and address and LinkedIn. You can get a hold of me anytime. I think Alnissa and Libby a couple friends of mine are on here, and others can attest that I'm pretty responsive, and I'd be happy to answer your questions or concern. Through my teaching role at the university, I believe in being an educator. So I hope that I can help educate. So in terms of feedback today during this session, a couple different ways if possible. One is, if you want to ask a question, go to the chat function, put it in there in any kind of detail, or just say, I want to talk to you. And Libby will pick up on that and let me know. Secondly, I'll break at convenient points in the presentation so that you can ask questions. If you're, I'll say, let's stop here. Any questions or concerns, etc. Okay, does that work for you? All right. The title is Proposed Wisconsin Business Entity Law, etc. I modified this slightly at the request of Alnissa because I think she made a good point. A lot of people form their businesses, and for me just to talk about what changes are going to be made or the updates that can be made, she suggested I start at ground zero. So for some of you, this is a refresher. For some of you, it's new information. I'm not sure for any of you what it is, but I'll really start at kind of ground zero here. And some of it will be new information for some of you, some of it will be a refresher. And then I'll weave in the changes that I hope occur. So just a brief comment on that, so you know. And I'm currently working on this with various people. Wisconsin business entity law, meaning nonprofits, for-profits like corporations, LLCs, LLPs, and limited partnerships. There's a 500-page law that's been drafted that I'm a co-author of, that's going to get introduced in the legislature any day. And it essentially touches every business entity that's formed in Wisconsin. So whether you have one or not, or are going to have one or not, you're going to be affected by this. Some of you very minimally, some of you substantially. So I'll mention that down the road here, but that's what's going on. I post stuff on LinkedIn about it from time to time. I'm hoping it gets introduced this week in the legislature. I'd like to testify about it, et cetera. So this is a substantial law coming down the road. It really affects LLCs the most, and limited partnerships, and the rest less substantially. Okay. So I'm just going to this is not getting down to the DNA level. I'm not going to get down to the cellular level here. And it's not an exhaustive review of the pros and cons. I'm going to just, in an hour's time, I can't do that. If any of you wants to do that, again, I'm a teacher. I'm happy to have offline conversations with you. But for this purpose, I'm not doing that. And you ought to know that each situation can be unique. For example, law firms and accounting firms and professional firms like doctors and others have separate regulatory rules to comply with, in addition to forming an entity. So there may be special rules, savings and loans do, banks do, insurance companies do. So there are unique situations for different companies and things that we can't really address in the time we have here. So again, I like to put things in context. And so again, a brief history. Sole proprietorships have been around since the beginning of time, meaning, however you believe the world arose. General partnerships, whenever there were two or more people, by definition, you can have a partnership. Corporations are at least 1,000 years old. I've taught at the university for years, and I asked this question about the entities people work with. And I had a student tell me they worked with a company that was started in Sweden in the year 1050. And it's now called Storo Enzo. Storo Enzo, it's a paper company, used to own paper mills in Wisconsin. It's 1,000 years old, okay? So there have been corporations around for a long time. Limited partnerships since the late 1800s. S corporations, which are really a tax device, right? It's a corporation that makes a tax election. That's around since 1958. LLCs have been around since 1977 in Wisconsin, 1977 in Wyoming, but only 1994 in Wisconsin. And for all states, it's about mid-90s, okay? LLPs, 1995, and LLPs are basically for professionals in real estate. And then again, major updates I mentioned in 2021. So I always show people this slide just to show the impact here. This shows you from the year 1993, the year before there were LLCs in the state, until last year, the growth of entities. So you look at 93, there were 200 limited partnerships. There were no LLPs because they weren't allowed then. There were no LLCs because they weren't allowed then. Nonprofits, I don't have the data on nonprofits, but there are about 9,500 corporations formed and 10,000 entities in Wisconsin. So if you then ratchet forward to the year 2020, last year there were 53,000 entities formed in the state, and you can see the numbers. LLCs are dominant. You see nonprofit numbers and corporate numbers. Now, here's what I believe. If you go back to 93, sole proprietorships don't have to register, nor do partnerships. So I don't think there were just 10,000 businesses formed in 93. I think there were probably 30, 40,000, but they were sole proprietorships and partnerships. Now, just a brief personal story. I should have maybe told you at the outset. One of the reasons I'm passionate about this topic is because of my own family. I grew up in Marinette, Wisconsin in the 50s and 60s. My dad owned a bakery, Boucher's Bakery, and it was a sole proprietorship. My father died my senior year in high school. And you know what legally happened to that business the day my dad died? It evaporated legally. It evaporated. What does that mean? There's no perpetual life. My mother, who took over the business, and I was the oldest of 5 kids, and 5 kids were in all high school and younger. My mom has to run a business. She had to go to court to get court approval to pay bills. It's ugly and unnecessary. And so one of the reasons I got involved in this area of law is because I saw that up close and personal, and I wanted to make an impact. And LLCs are the substitute, for being a sole proprietor. And that's why you see the numbers, in my opinion, the way they are. Also a substitute for general partnerships, because general partnerships also don't have perpetual life. So after this slide, I'll stop if you have any questions. So this slide, I tell people there are really only 3 criteria that you really look at when you choose a business entity type. You'll read books and you can Google and you'll have 15, 20, 30 criteria. I think there are really 3. One is limited liability. You don't want to have unlimited liability like my dad did as a sole proprietor, or you would today as a sole proprietor or a partnership. You want limited liability. Number 2, you want to pay the least taxes. Now, I'm talking taxes here. I'm talking income taxes. This isn't Social Security. This isn't real estate taxes. This isn't sales taxes. All businesses, whether they're sole proprietorships, except 501c3 nonprofits, they don't pay sales taxes, but others do, okay? You pay sales taxes, real estate taxes, et cetera. We're talking income taxes. So the middle column says the plus means from an income tax standpoint, it's better, okay? And then the final column is flexibility. And what do I mean by that? I mean, the entity world is changing. The world is changing so quickly now. If you're in an LLC, what happens if, I get asked this question all the time. Joe, I should be a corporation because I'm going to go public and I should be a corporation. Yes, if you're going to go public, you have to be a corporation, but you don't have to start out as a corporation. You can switch to a corporation because at LLC, you can convert to a corporation. Likewise, you could start out as a corporation and realize, this doesn't work for me. I really would prefer to be an LLC or something else. you can convert to that. So flexibility means you can switch. You can switch. So let me stop there. It looks like there's somebody had a question, and if anybody has questions to this point, I'd be happy to address questions that people would have.
I hope I can just speak a question rather than type it out.
Go ahead. Clint,
And that is,
Clint? Yeah.
yes, it is. With regard to taxes and the C corporation, the negative sign there, I'm assuming that's because in general, it's assumed that the corporation would pay taxes and the shareholders will pay taxes.
Yeah, that's exactly, he's spot on. What did he just say? The common phrase is double tax. A C
Yes.
corporation has a double tax. The corporation pays a tax, and then if it makes some profits and distributes the profits to the owners pay a tax. That's the so-called double tax. So all these publicly traded companies you see and all the C corporations you see, so-called C corporations, in theory, can pay a double tax. Okay, that's what, Clint, that is what that refers to. Any other, I see another chat thing there, perhaps. Other question? Maybe I can look at, click on the chat and see what it says. Why is the corporate tax shown as negative? I think I just answered that question. The question says, say two partners, LLC, how one partner could be S corp. Well, the question, I think the question refers to, again, I don't know who said this, Serge, is it? Said, say two partners, I don't know, form an LLC, how can one partner, how low can one partnership percentage be? The answer is you can have 0.00, I mean, to have two owners of an LLC, you could have somebody with just a tiny fraction. I mean, just a little fraction. So there's no rule on how small an ownership percentage can be, if that's what the question was. There's no rule on that. Any other questions anybody might have at this point? Okay. So I just, going back maybe a step here, this is the world I live in. You know, I deal with this daily. People come to me and they have a business idea or some nonprofit, whatever, being for-profit, nonprofit, whatever, and they want to form a business. And I say, let's sit down for a minute and talk about where are you in this process? So I call it the pre-birth process, the birth process, the business is born, the business operates or lives, the business dies or terminates, and then post-death. Each of these stages is important, but you need to understand as a layperson that before you form the business, you have no limited liability because you are now individuals doing whatever you're doing, and you have no business at that point. Likewise, after you terminate the business, there may be some residual things you have to do to clean the business up. It's like leaving an apartment, you know, and you have to clean up to leave the apartment. But once you leave the apartment or leave the business, now you're on your own again. It's personal liability. So it's only in those brackets between birth and death that you have this limited liability and perpetual life. So some people lose track of those things. They'll come to me and they'll be working for 6 months on this new idea, and they've really incurred some expenses. They've agreed to do some things, and they have no entity. It's just individuals at that point. It's really a partnership if it's multiple people. Okay. And on the exit of a business, you have to understand that, you know, you no longer have a business. You're operating individually again. So you've got to work, you know, understand those parameters there. So this may or may not help you. I use this to help people through the process. So to start on the bottom left corner, it says limited liability. Do you want limited liability? I hope everybody says yes. Okay. Some people may say no. But if you say yes, then you have to decide whether you want a pass-through entity, which means it doesn't pay taxes. The owners pay the taxes. And you can see the types of business there: LLCs, S corporations, LLPs, or limited partnerships. And then, or an entity level tax, which is a C corporation, or could be an LLC if you choose to pay taxes. So these are this is kind of another way to analyze this as you go about your thinking. This does not, I'm not talking here about nonprofits. I know Alnis isn't a nonprofit and some of you may be. So maybe I should speak to that for a minute or two here. When people come to me about wanting to form a nonprofit, and I probably help a half dozen people every year pro bono to form a nonprofit. They have whatever educational, scientific, religious, whatever the purpose is. Here's what you have to be. There, you're in the limited liability box because you're going to you have to be a corporation or an LLC to be a nonprofit. So you're going up that tree, but you're not going to be a pass-through because nonprofits aren't LLCs. The owners, you have to understand, maybe I should have said this earlier, who owns a nonprofit? I ask my students this all the time. Hey, can help me out there? Anybody in the audience? Who owns a nonprofit?
The public.
Thank you, Alnissa. The public. I tell people nobody. Nobody. And in theory, I guess this is example for some of the older people on the participating. I don't know if you remember, back about 15, 20 years ago, Blue Cross Blue Shield in Milwaukee wanted to go public. And they were a nonprofit. You know what they had to do? They had to pay the state of Wisconsin, I'm not making this up, $500 million. $500 million to go public because they were owned by us. It's a nonprofit. So $250 million went to the state of Wisconsin, in Madison, UW Foundation. The other 250 million went to Medical College of Wisconsin, again, health-related groups, because they wanted to become a for-profit company. If the Packers, who are a nonprofit, ever wanted to become a for-profit, they'd have to pay $1 zillion to do it. By the way, the Packers, to all you saying Boucher's nuts, what is he talking about? I own stock in the Packers, right? The Packers are a total anomaly. They were created in the 20s, and then they became a nonprofit, and you could be an owner. You can't, what does it mean to own the Packers, by the way? Anybody know what it means to own the Packers? Zip, nothing, nada. You get to go to a meeting in July and sit in the hot sun in Lambeau Field and vote for a director. That's it. If the Packers were ever to terminate, you get no money. You don't even get season tickets. You get a better chance at buying gear or something. That's it. You don't even get a tax deduction for buying the stock. So the Packers are a weird anomaly. This isn't the norm. The normal nonprofit. So here's what I do with people who want to form a nonprofit. They come to me and I give them some documents for the corporate side, the articles of incorporation, a sample, and the bylaws. And I say you have to complete these in the articles and file them with the state, and I'll help you with that. And then I give them the tax form that you have to file, because to get nonprofit status, and again, Alnissa can speak to this, I'm sure, because she's experienced. You get the corporate stuff done with the state, and then you have to file a Form 1023 with the federal government, right? And that Form 1023 takes several months, if not longer, to get approved by the federal government to say you are a tax exempt organization and the proceeds, the donations are tax deductible. So a nonprofit is a whole different kind of can of worms. You have to file the corporate papers and you have to file this tax form. Okay. And again, I'm just being honest with you. I do this 4, 5, 6 times a year pro bono for people. All I ask them to do is pay the filing fees with the state and the feds, and they have to do the work. They have to come up with there's a lot of work on the 1023, as Alnissa can confirm. You have to have budgets and all sorts of stuff. So I ask them to do that. I'll help them through it, but they have to do the work for that. Okay, they have to understand that.
Joe, there's a couple of questions in the chat.
Yeah.
One about B Corps and one about co-ops or cooperative ownership structure.
Yeah, so Becky asks, where do B Corps fit in? That's a good question. A B Corp is an entity that by its nature says it's not intended to maximize profit, okay? So it's a corporation. And the reason B Corps were created is because the essence of a corporation, if you're in the for-profit mode, is to maximize profit. And some people say, you know what, that's not what I'm in this for. I'm not in it to maximize profit. It's not my duty to make the most money I can make. So if that's you, you might go the B Corp route. Now there's some groups who like working with B Corps because of that thinking. There haven't been that many formed in Wisconsin, candidly. It's not, you can form a regular corporation and say you don't want to make a ton of money. So a lot of people just do it that way. The co-ops, that's a great question. there are a handful of co-ops formed every year in Wisconsin. And I'm not that expert at co-ops. I've worked with some co-ops. A co-op essentially is just a group of people with a mission. They own like the Willie Street Co-op in Madison, it's a food cooperative, or it owns a building. And they've come together, they each are members, and they each have a voting right to make a decision about how that co-op operates, maybe the Willie Street Co-op or the real estate. I'm just not honestly that familiar with it, to be perfectly frank. I haven't formed that many co-ops. Then a question says, if you don't want to do all of that to become a nonprofit, you can come under a 501c3. Yes, that's a good point. So if you, and let me go back a step to answer, Lisa made this point here. Back in the 80s, I was on the board of United Way, and I've been very involved with nonprofits since I was a young lawyer. I just believe in the mission of so many nonprofits and want to help them out. And my younger brother, 3 years younger, was born with a developmental disability. So I've been around disabled people my whole life, and I'm very touched by and very moved by this and want to help. And in Dane County in particular, that's what I'm familiar with. Everybody wants to create nonprofits, and that sounds great, but how do you all have the administrative ability to do it? There's paperwork, there's accounting, there's taxes. So I was always encouraging people to align themselves with another nonprofit that they could really work with to get some of that done. And so I think United Way, Renee Mo, who's the CEO of United Way now, is a former student of mine in the executive MBA program. You could talk to a Renee Mo or somebody at United Way or a group like that, and they would help you align yourself with somebody so you don't have to do all this yourself. That's a really good point that Lisa made there. I tend to agree with that point. Any other comments at this juncture? Okay. So I'll just go back to a fundamental question. Will there be personal liability? People, you just don't want to ruin the rest of your life financially because you make a mistake in a business context. You're not a crook, you're not a bad person, you're not a criminal, but you make a business decision and the business fails. You don't want to go to bankruptcy court and lose everything. At least I don't think most people do. And you don't have to. What will the tax consequences be? We've talked about this again briefly already. Again, income taxes are the main one. You don't want to pay maximum income taxes. You want to, like everybody else. And I don't know if you've seen the recent ProPublica reports about all the wealthy people and how they're not paying taxes. I'm not here to pick on them, but there are ways to do this, and you should at least inquire to minimize your taxes. How easy is it to add new owners? How easy it is to add new owners? That's important because maybe that you and a friend are starting this business, and you can see it growing with other people joining. So how easy is it, the business that you form, the model that you pick, easy to add owners? Again, LLCs are pretty easy to do that. Corporations are too, for the most part. It's not that hard, but you have to think about that. How are you going to do that? Who runs the business day to day, right? Who's in charge? You form a company, be it nonprofit or for-profit. Who do third parties see running the company? Who's the one running the company? And how do they know who that is? That's called agency law. Agency law. Who's running the company? What do people see and hear? Now, I like to use this example. I've been to hospitals more often than I'd like because of family. The good news, sometimes it's because of births of my grandchildren and my children, but oftentimes for ill people, whatever. Hospitals are the great example for agency law. When you go into a hospital, everybody's got a name tag and they have different color clothing based upon their role in the hospital. Why is that? That tells you as a visitor to the hospital what their authority is. In other words, are they a physician? Are they a nurse? Are they an administrator? Are they in the what function do they have? You're not going to run up to the doctor to ask for a meal. I mean, you're going to go to somebody. You see what I'm saying? So these business cards and these uniforms give you the what's called a parent authority. They have the authority they have because of the title that they have. They are the president of the company. They are the treasurer of the company. They are the secretary of the company. These have meanings. So when you put a company together, you need to assign titles based upon what you think that means, not only internally, what they're going to do within the company, but what they're going to do outside the company. And what do other people think they're going to do? Okay, that's very important. And then I think I like to discuss this with people when they form a company. I really think you should break decisions down into big decisions, small decisions, big decisions, entity critical decisions, or day-to-day decisions. The big decisions are, you formed the company. Are you going to merge with another company? Are you going to terminate the company? Are you going to bring in more owners to the company? Are you going to raise a bunch of money for the company? Are you going to borrow a bunch of money for the company? Those are big decisions. And everybody, you would think, the management, the owner should decide that. Day-to-day decisions. How many pencils do you buy? How many computers do you buy? Things of that nature. You shouldn't all have to vote on that and every day. So you need to think about who's making day-to-day decisions and what they are, and who's making big pictures decisions, and how do you do that? Is it the board of directors if it's a corporation? Is it the owners, the shareholders if it's a corporation? Who makes these decisions? Okay. So again, a simple slide on the left, entities with limited liability and entities without limited liability on the right. Now, I'm going to just ask if there are other questions right now, but let me just go over this quickly. The profile of an LLC is it's a general purpose entity that everybody can use for almost any entity in theory, okay? LLPs, the way the statute's written, and it's because it's an older statute, it pretty much has been narrowed down to in Wisconsin to accounting firms and law firms and professional groups and real estate. It's not been used as a general purpose company. So you're not going to find, when you go back to that slide that showed how many were formed last year, very few LLPs were formed. LLCs are the default entity. Limited partnerships. Limited partnerships, if you looked at that history back there, I said that they started in the late 1800s. They did, I call them the dinosaur of business entities. Nobody's using them much anymore. They're being allowed to wither away. LLCs have really taken the place of limited partnerships. They still occur once in a while, but they're just not used very often. C corporations are used in the Madison area for two purposes typically. One is people come to me or come to other lawyers, whomever, and they're gonna go public and they want to start out as a C corp, or they're going to raise venture capital and they believe that venture capitalists want them to be a C corp. Other than that, you shouldn't be a C corp unless you're going to go public or raise venture capital. I think it's a mistake to be a C corp personally. S corps. You've already been a corporation for years. You've been around for years, and you want to keep it that way, but you don't want to pay double taxes. You elect to be taxed as an S corporation. You should talk to your tax advisor about that, or a friend about taxes. I'd be happy to talk offline to people about that. But there is a place to be an S corp where you get a single level tax, but you're a corporation. Now on the right, these entities without limited liability. When people come to me and actually think they're going to be an entity without limited liability, I write them a nice letter and say, you're an idiot. What are you doing? Why would you have, basically because they're cheap. They don't want to spend filing fees. It costs $100, $130 to form an LLC online. If that's too much, I understand for some it may be, but it's just, it's an insurance policy, okay? It's an insurance policy. So I'll stop right here. Any questions at this juncture too?
I had a question, Joe.
Yeah.
Could you briefly just go into the, I think it's either L3Cs or LL3s?
Yeah, so yeah, that isn't, we don't have those here, I don't think. And it is a variation of a limited partnership, because you remember a limited partner is a general partner that has unlimited liability and a limited partner that has limited liability. Most people don't like the unlimited, the unlimited liability part, right? The risk. And so they can form something like that. And some states have that. That's a good question. You'll see that though. And other states, for example, in Wisconsin, if you're a lawyer, a doctor, an accountant, and you want to be a professional corporation, you have the acronym at the end called SC, Service Corporation, okay? In many states, it says PA at the end, PA, Professional Association. It's really the same thing. So there are different acronyms in different places that can confuse people, okay?
Okay.
Thank you for the question. Any other questions? Okay. So again, tax concerns, what is, I am repeating myself obviously here, but I think it's important. What is pass-through taxation? It means the owners of the business pay the income taxes, the owners of the business. So in partnerships, when your tax is a partnership, the owners of the business pay the taxes. You know, I don't know if you read, again, the stories recently in the news about the 2017 tax law. Anybody know what I'm talking about? The 2017 tax law that was changed and made material changes to corporate taxes. It also made material changes to pass-through entities. Pass-through entities now get a 20% deduction, a 20% deduction if they fit within the categories that qualify. You know why? Because Congress wanted to say that if you were a pass-through entity, you were basically in the same position as a corporation, because now corporate taxes, the maximum corporate tax is 21%. So they tried to kind of mirror this up. So if you're a pass-through entity now, you get a 20% deduction starting in 2018 that never existed before. It's really kind of phantom deduction, to be honest with you. And this has gotten a lot of criticism lately, saying that a lot of wealthy taxpayers are taking huge advantage of this. I think the numbers were out there that Mr. Bloomberg saved hundreds of millions of dollars because of this flow-through taxation. He's a limited partnership, if you've noticed, his entity, Bloomberg LP, it's a limited partnership, pass-through taxation, okay? He formed it before LLCs were around. I'd be curious if he'd form an LLC now, but back in the day, there weren't LLCs. He formed Bloomberg LP, which is a limited partnership. So on the right side are entities that pay entity level tax. And again, if you do that, that's fine. And there are places to do the people who do that. S corporation.
Sorry, there's a couple questions in the chat, specifically about S corps.
Go ahead.
About,
I'll look right now. Okay.
and then pass through taxation, if you want to give another kind of description of that.
Yeah. So bill to everyone, 80% of all businesses use S corps. I don't know, Bill, if it's that high a number. I can tell you this, that new entities formed are 90% are LLCs. Now, whether they elect to be taxed as an S corporation, some of them do. So I don't know the answer to that point. 199A goes away after. Yeah, it does. That's a good point. This deduction may go away. This is the deduction I just alluded to. Remember, what Congress had to do is pass a tax law that met certain guidelines, and the estate tax laws go away too in 2025. They sunset. They go back to where they were. Somebody asked me to define pass-through taxation again. Let me imagine that you and I were business owners, co-owners of a business, you and I, and we formed an LLC. By definition, if you form an LLC, your tax is a partnership. That means that if that LLC makes money, it's a profitable business. Let's say it's 50-50, you and I. You get 50% of the profits allocated to you, and I get 50% allocated to me. And that goes right to my personal tax return, and it goes right to your personal tax return, and you have to pay taxes on it. Okay, that's what that means. The company doesn't pay those income taxes, you do. I hope that helps the questioner. Why would an LLC elect C status? I ask myself that question every day. I don't think they should. I think you should form a corporation if you want to be a corporation. All right. And the new law that I'm going to talk about down the road here in a few minutes, permits you to convert to a corporation really easily. So if you truly want to be a corporation, become a corporation. That's my view. Any other questions at this juncture? Okay, thank you for the questions. So who's in control? Back to that question. In a standard partnership, the partners are. In a partnership, there's no multiple layers of ownership. The partners are in charge. In a general partnership, it's the general partners. In a limited partnership, it's the general partner. There are limited partners over here and general partner over here. The general partners are in charge. And in an LLP, the general partners are in charge. That means they make all the decisions. big and small, big and small. Now, they can choose big accounting firms, big law firms that are LLPs. They have what's called a partnership agreement, and that allocates decisions among them in certain ways. But without any agreement, the default rules are all the partners decide. Okay, LLCs, if you choose to be member managed, which means managed by the owners, the members decide. If you choose to be managed by managers, then the managers decide. And that will be true with the new law. That isn't changing. That isn't changing. You have to pick who's running the company, the members or the managers. In a corporate, by the way, if you pick managers, it's like the corporate model. You know, have members up here who are owners. You have managers down here who are managing day to day. Okay. And that's the corporate model. When you pick a corporation, you have shareholders over here. All shareholders get to vote on is who are the directors, and if you sell the company. In other words, big decisions. Who are the directors and whether you sell the company or terminate it. They don't get to make day-to-day decision, the shareholders. Only the directors are in that position, and the directors pick officers to run it. And an LLC could be like that if you pick what's called manager management. Okay. Now, another question that comes up all the time is, can I transfer my ownership to someone else? Now, I've been in this company. You and I have been in a company for 5 years together. Let's say it's Libby and me. We've been in a company for 5 years together. And Libby says, that Boucher guy, I don't want to work with him anymore. I want out of this business. The question is, can she transfer her ownership to somebody else? And you can see the answers here. In a standard C Corp, she can't. So if Libby and I formed a corporation, the ownership is freely transferable. She could transfer her ownership to somebody else. And so I run the risk of Libby transferring it to my worst enemy, right? Somebody I can't stand. And she says, I'm going to stick it to Boucher. I'm going to transfer this company to his enemy, you know, type of thing. Yeah, that can happen in a C Corp. An LLC, it could be the same if you have a partner, if you have an operating agreement. We'll talk about operating agreements in a little bit that says so. LLCs are a bit dicey to transfer to. They're just okay. It should really be a question mark there. On the no side, if you're in a partnership, you can transfer. There are two pieces to owning a business, right? Two pieces of ownership. One is voting rights, and the other is the value of the ownership. So if I own stock in a company, whether it be a company or a partnership, I have value for that stock and I have voting rights. I get to vote. I can transfer my property value in a partnership to someone, but I can't transfer the voting rights. So again, if Libby and I are in a business together, we're general partners, and I can't stand Libby. I want to get away from Libby, and I transfer my ownership. I can transfer the value of it to somebody, but Libby, thank God, in a partnership doesn't have to deal with that new person in voting. She's the only voting person after that. You can't transfer voting. And so you see that in that right column. Transferring partnership interests, LLPs and so forth is very difficult. And one of the reasons people form those entities is they don't want to do business with people they don't know. They don't want to do business with people they don't know. Any questions at this juncture? Any other questions? So we're actually early here. It's only 22. So if we get done early, we get done early. I want to provide value to you. I'll be here for the whole hour. I want to talk about this new law and 3 specific things you have to be really, really aware of. Okay, first of all, under current law, if you form an LLC, which again, 90-some% of businesses are these days in Wisconsin, to have a document to manage the business, it must be in writing. So if you form an LLC, again, Libby and I form an LLC, if we want to have an operating agreement other than the statute's what governs them. It's the default rules. If we want to change those rules, we have to have it in writing. That's the current law. The new law eliminates that requirement. That's a huge deal. What does that mean though? The statute governs. So I like to use the example of, I'll pick up my cell phone here. You buy the latest cell phone, right? That Jobs made his name. One of his legendary things is he tells you what choices you have, right? You buy this phone and all the choices are made for you. Those are default rules. That's like the statute for LLCs. It's buried in the statute. So if you think you understand the statute and you think you know what it means in terms of how you form the company, how you operate the company, how you terminate it, you're good to go. You're good to go. But if you're not quite sure, you better look at it and you want to change it. In the current law, you have to have a written operating agreement. Under the new law, it doesn't have to be in writing. As a lawyer, that scares me. All right. People making decisions and they don't put them in writing. Then 2 years later, they come to me and say, you know, Joe, we agreed to do this. I agreed to do this with Mary, and Mary's now saying no. And I'd say, how do you prove that? What's the proof of that? All right. What's the proof of that? So under the new law, there will be no written operating agreements. Again, I think that's the way of all around the country. That's what's happening. So our new statute has the same thing. The second point I'm going to make is also very, very important. Anybody out there who has a business entity currently, you know what I'm talking about. You get and I could dig one out here. You get a card about this big, a green card every year, don't you? A greenish blue card. What does it say? You got to file your annual report, right? It says you have to file your annual report. Now, do you know what happens if you don't file your annual report? In theory, your business is terminated, is administratively dissolved. It's like not renewing your driver's license. It's like not renewing your passport. If you don't go online, you can either send the card in with some money or you can go online. But if you don't do that, it administratively dissolves your company. Then you're in this mode that I talked about earlier, that you're no longer a company and you have personal liability. You're not a company anymore, an entity. So you have to, what happens to you if it's, again, Libby and I, and we screw this up and we don't file this annual report, she and I are now general partners, which means we have personal liability for each other in this business. What's going to happen under the new law? You're not going to get a postcard anymore. It's all going to be online. So the state saves a whole bunch of money. The estimates are $500 or $600 grand of processing time. But business owners have to make a point of renewing it. You're not going to get a notice. I mean, you're going to get an email notice and it's going to be buried among all those other emails you get, junk emails you get, right? And you got to be really careful about that. And I'm concerned that this is going to get lost. People are going to miss this. I think this is a big deal. Do I think this is a good idea? I do. When I worked on LLC laws back in the 90s, I was a co-author of the original law. I worked on it for 30 some years. I was in favor of being able, and this was 93 when we draft. I was in favor of people forming online. This was 93. This wasn't 2003, wasn't 2013 or 20, it was 93. I thought we should be online. So I think this is the way to go. If you're a business owner, here's what you don't want to have happen. You don't want to inadvertently make this mistake, right? But the other thing you don't want to have happen is, let's say you have a new business idea and you really got a great idea and you have a name for it. You really think this is it. And you go online to the state and you look up the website for names and the name is taken. And darn it, the name is taken. What if that name is taken by an entity that doesn't even do business anymore? They're just sitting there taking a name that you'd like to use. You'd rather have that company out of business, wouldn't you? So you could use that name. So this is going to clean up the records, clean up the database, but some people are going to be punished because they're not paying attention. So to me, this is a risk. The final one is under the current LLC law, when we drafted it, we basically built in agency laws. And I mentioned this to you early, agency laws, that is who's authorized to do things. It's in this statute. That isn't the way it's done anymore. Now, agency law is not in the entity statutes. It's not in the partnership statutes. It's not in the corporate statutes. It's not in the LLC statutes. It's general agency law. So what does that mean? Back to my earlier point. When you give a person a title, president, treasurer, whatever it is, that is called apparent authority. You're telling third parties what that person can do for your company. That better match up with what you think they can do. Because internally, you may have different rules, right? You may say, you can't do this, you can't do that, So you have to be really careful about what titles are of people going forward. I'm not saying to worry about it. This has been the law for years and years, and it's worked for others. But you just have to be careful about what titles are and what people are authorized. Now, to be sure, here's what's going to happen. Banks, insurance companies, all real estate transactions, they're going to want you to sign documents to say who's authorized. You're not going to get to borrow money from a bank just on a or deposit money in a bank without signing signature cards and all kinds of documents that say who's authorized to do this. Typically, there are resolutions that you have to say the company resolved to do this. So whether it be savings and loans, credit unions, banks, insurance companies, they're all going to require documentation that show who's authorized. They're not going to let you do this just by a verbal, I don't think. And likewise, real estate, all real estate's always in writing and always has been. You're not going to be able to buy and sell real estate unless you can prove to third parties who's who and who has the authority, right? Now, I personally think this is going to get expanded because people are going to wonder who they're doing business with. They're going to want to make sure in the world of identity theft and everything else, who knows what's going to happen. But I think this is going to, I think we're going to get a little bit, it's going to get a little dicier, I think, over time. Now, final point on this new law and to pay attention. When I said it applies to everybody, look at these three things. LLCs are 90-some% of the businesses. You don't need a written operating agreement anymore. Well, so 90-some% of the businesses this impacts. So we'll talk about effective dates in a moment. Annual reports, every company that has to file an annual report, which are LLCs and corporations, are affected. Again, and nonprofits, right? So this applies to everybody. Agency rules, this really just applies to LLCs, but again, given the dominance of LLCs in the world, this is a huge impact, okay? Now let's talk about effective dates. If this gets passed under the current version, what does it mean to you? So if the law gets passed the way it's currently written and an entity does nothing, the new law will apply as of January 1, 2023. So if I'm an LLC today and I have an operating agreement that operates my company and it's in writing, the question is, do I want the new law to apply to me? Because it will by default apply to me as of 1/1/2023 if I do nothing. An entity can choose, the second bullet point, to use the old law, but it must make the choice by January 1, 2023. I don't know how they're going to come up with how you do that. It's not in the statute. This is an administrative thing. How they're going to, so let's say that you're an existing LLC with a complicated operating agreement that you want to keep, and you don't want any confusion. It's likely you're going to want the old law to impact you. So you're going to want to choose the old law, I think. All entities can choose, if the law passes, to have the new law apply even before 2023. You can make that choice. Again, I don't know how they're going to implement that at this point, but that's also in the statute. So that's my spiel on this new law. I just had three key items. No written operating agreement required. You're going to have to file online, and the agency laws will be different. And so you have to pay attention to what that means if you're an LLC. So I'm happy to answer any and all questions. And if people are reluctant to ask me questions this way, you can contact me through LinkedIn or a law firm site or whatever you want, and I'd be happy to answer your questions.
There is a question in the chat
Yeah,
about.
let me get there. I'll log on it right now. Okay. It says for a new LLC with initially only startup costs without sales income or any of the quarterly. Okay. Well, this is I don't know what Keith. I'll go backwards. There are a couple other ones in there too, but let me go back. Let me answer Keith's question first. So for a new LLC with only startup costs but no income. So there are two, income taxes, remember, individuals pay the income taxes on a flow-through entity if it's a new LLC. So unless you have income from it, you know, how you normally pay your income taxes wouldn't change, right? However you do that wouldn't change, it seems to me. If you have employees though, and there are expenses from employees, you have to file employment reports. If that's what you're alluding to, that's a different matter. Income taxes are different from employment taxes for employees. So I don't know what exactly Keith is asking there. Paula asks, as a newly formed LLC, when is the annual report due? The way I think it works is, if you form the LLC in the first quarter of the year, the annual report is due the first quarter of the next year. If you file it and then they've allocated it by quarters when you file. So if you file in the first quarter when you form it, then it's the first quarter. If you form it in the second quarter, it's the second quarter. Kind of rolls out through the year that way, I think. That's the way it works. There's a question here as well from Noon Eggenberger. Reason for doing so is starting a C Corp is done if you're intending to raise venture capital. Wisconsin C Corp is useful. Okay. Okay. So I get asked this question all the time. I see one of my colleagues on the listening, Craig Miller. Craig could confirm that this is true. We deal with this all the time. Look at people come to me and come to us and say, oh, we're going to be the most successful company ever. And we're going to form a C Corp in Delaware and we're going to go public. I say, I'm LeBron James. I'll see you on the basketball court. I mean, you know, the likelihood of this is not high. It's just, I'm not trying to belittle anybody, but it's just not likely. So I think we have to be, I look at data. I mean, what are the statistics? It isn't, you know what percent of companies are public in around the country? Anybody have any idea? What percent of companies in the United States are public? Anybody know? Less than 1%. Less than 1%. And there are 25% less companies on the New York Stock Exchange now than there were 20 years ago. So they're less all the time. So number one, it's just not frequent. The second piece of it is Delaware. Everybody says, got to be in Delaware, got to be in Delaware. Look at Delaware's fine. We formed lots of Delaware companies for clients of ours who do business all over the country, multiple states. But if the company is just going to be in Wisconsin and that's their market, for now, you don't want to pay taxes in Wisconsin and in Delaware, filing fees in Wisconsin and in Delaware. And that's what you have to do. If you form a Delaware corporation and you're doing business in Wisconsin, you have filing fees in Delaware and filing fees in Wisconsin. You're doubling up on your filing fees. When they say Wisconsin, Delaware has no corporate taxes, that's true, but the filing fees in Delaware are not insubstantial. I'm providing work on this for this law that I'm working on, this new law I told you about. I'm telling you, the filing fees in Delaware are substantial. And don't let anybody tell you otherwise, they are. And so it's very deceptive. Now, I think I formed a lot of Delaware companies, but that's for a specific purpose, a broader United States company, not just one either in Wisconsin or in the Midwest. That's just, again, my view on that. So is Delaware still popular because it has the best laws, favorable to the board of directors? Let me tell you why Delaware is the most popular, okay? It isn't the filing fees. It's two things. One is Delaware figured out a long time ago, it's this dinky little state by Pennsylvania and Maryland and New York, and it wasn't going to get to compete unless it had the most up-to-date laws. So they're passing laws like every day. I'm exaggerating here to update them. So number one, they're constantly updating, and they're pro board members. Yes, they are typically pro management board members. But the second reason is, and this is where lawyers focus on too, is that they created a business court 100 years ago. And so they have judges who are expert at business law evaluation, case evaluation. So they'll have hundreds and hundreds of cases every year. If you look at the Wisconsin Supreme Court, I follow this closely, so does Craig, who's on here. There are 2 cases a year get to the Wisconsin Supreme Court on entities, 2 cases a year. And at Delaware, it's multiple cases a month. So there's much more established law in Delaware, is my point, through this business court. And so lawyers like it because they think they know what the answers are going to be because the court's already made a decision on some iffy questions. So that's why Delaware is picked. Any other questions? I don't know if I missed any that were in here. Is there a way of treating an LLC member as passive enough that he or she avoids self-employment income? That is a great question. And I can tell you that, so here's the question. If you're an active person in a business, you have to pay self-employment tax, right? If you're an employee, you pay self-employment tax. The question is, can you be passive and not pay self-employment tax? The answer is yes. If you're a limited partner, you're automatically considered passive. In an LLC, it's harder. The answer is it's much more difficult. I'll have to discuss that offline with somebody. It's much more difficult, Bill. Trust me, it's much more difficult. The IRS doesn't like to grant that status to owners of an LLC. Oh, now there are 3 new messages. Okay, I'll go down. Maybe not. Okay. What's my, I don't know who's asking what here. Let me. If you want to keep an existing operating agreement, file your reports online. Is that an option? But file your reports online. If you want to keep your existing operating agreement, well, I think you can keep your existing operating agreement by doing 2 things. One is either elect to be taxed under the old law, elect to be covered by the old law, or January 1, 2023, say this operating agreement's my operating agreement for this company going forward. Either way, I think works. What's your personal email? Bill to everyone. I don't know who he's asking, whose email address he's asking for. Brian's iPhone to everyone. Is there anything special you need to do if you file an LLC in Wisconsin? We have online retail sales to people. Yeah, well, you may have to pay sales taxes in other states, Brian. You know, this goes back many, many years. You know, Land's End over here in Dodgeville. This is back again before the internet became what it is, and so forth. There was a case on if you sent out catalogs all around the country, send catalogs to your customers all over the country. Did the company have to pay sales tax in those states? And the answer was, if the only contact with the state was a catalog that went to that state, you didn't have to pay sales tax if you were Land's End in Nebraska or in, you know, Iowa. But if you had a store there, if you had sufficient contact, under this new law, under the current laws, I mean, Amazon has been fighting with people, every state forever over this issue, right? Because they sell stuff everywhere. So this is a sales tax issue, state to state fight. So there's no easy answer to this question, is the truth. Any other questions? Well, thank you. It was fun to be able to do this. I hope you found it instructive. Again, I want you to thank the sponsors if you ever see them, because I think this is it's a free event, right? And that's a good thing. It's a good thing. I mean, the Forward Fest idea to bring people together and to provide education and camaraderie and stuff is a big deal. We're flattered to participate in it. And so please thank the sponsors for their effort. Libby's on board here, by the way, with all Libby Gerds and her company, Groundwork Consulting, her good friend Molly, and Aaron and others. This event would not happen. They're the backbone of this event. They're the reason for this event. By the way, they also work on the Innovation Awards. I'm blessed to be able to work with her on that. So I honestly, if you ever run into Libby, please thank her, because this is the reason these things exist, because she and her colleagues make them happen. So thank you, Libby and others. So if there are other questions, I'm happy to answer them. Otherwise, I think we're kind of at our time point, but I'm happy to talk to people offline or at any time.